Hi, welcome to another Bitcoin video. In this video, we're going to talk about expected returns, and we will look at different models, say the regression analysis, rolling returns, stock to flow, that kind of stuff. And we will try to find out what are reasonable ranges of performance that we might expect from investing into Bitcoin. So first off, let's just look at historical returns. Over here you see a chart of Bitcoin roughly the last 10 years, starting at $10 all the way up to $60,000 where we are right now. And you can see the big boom cycles and the subsequent busts, another boom and another bust. The reason why you can see the price action in the very early days is because this chart is plotted on a logarithmic scale. So each major unit on this chart is a 10x from each other. Now, if we just look at this chart, how much performance did we get on average per annum? The answer is around 144%. So the Bitcoin price on average more than doubled every year in the last 10 years. Now, at some point, this growth has to slow down, right? The crypto market will mature, the prices will stabilize, and so future returns might not be as significant as they have been in the past. So let's have a look at a model that takes those diminishing returns under consideration. Here we've got a very popular chart. It's the Bitcoin rainbow chart. Link is in the description below. And what you can see here is that a regression line has been fitted to the price data. So the price bounces from the top to the bottom of the funnel, back to the top and to the bottom again. But it steadily increases over time with a decreasing slope. So we do see the fact here that over time growth slows down. Now when we just look at the end of this chart, say from here the orange line to the end of this chart, how much growth is implied in this chart? So currently the middle of this orange line is at 52,000, and in May of 2024 the predicted price is at 215,000. So the implied growth rate of this chart is 58%. So just by looking at this regression model, we can already see that growth slowed down significantly. But what's also interesting to see is that we are still at above 50%. Note the stock market returns something around the 7-8% range. So potential returns, though definitely not certain, are way higher than in traditional markets. Let's look at the next model, the rolling returns. Rolling returns means nothing else but to look at a fixed time frame, say 1 year or 4 years, and check how much did Bitcoin return in this time frame. And then we look at this fixed time frame and move this window all across the chart. So here we have the 1 year running return. The point over here means that there used to be a time when if you invested into Bitcoin at this point in time, you would have made a 90x on your investment after 1 year. So let's compare this again to the price history. That point in time would have been somewhere around the $10 mark. Then you would have held for 1 year and then exited somewhere maybe around $900. So this chart already looks quite nice, but it's pretty hard to model any function on this data. So let's smoothen this out. Let's look at the 2, 3 and 4 year return. This is the 2 year rolling return. So there used to be a time where you could get a 350x on your investment. Here we got the 3 year rolling return, and here we got the 4 year. So I like the 4 year rolling return the most. Why? Because Bitcoin halves every 4 years. So the new supply of Bitcoin gets cut in half every 4 years. And also just by looking at the historical price data, we see those peaks approximately 4 years from each other. And also those bottoms of a market cycle are around 4 years from each other. Now we could just put a regression line on this. The problem with this regression line though is that it assumes that at some point Bitcoin returns will permanently turn negative. And I don't think that's a very valid assumption. What's probably rather going to happen is that Bitcoin will grow to a certain point. The market overall will mature. Prices will be more stable. And both volatility as well as returns decline. And they will be at similar levels where now traditional markets are. So a more appropriate way to model this is this line. It's a logarithmic line. It starts very high and it goes closer and closer with time to the x-axis, trying to model that over time returns decrease. Now, what does this point over here mean? It basically means that our model predicts a roughly 17x return in a time frame of 4 years. So if you hold now for 4 years, this model would predict you get a 17x. So what does this now mean in terms of annualized return? It means that prices are approximately doubling every year. Last but not least, let's look at the stock to flow model. The link to this chart is also in the description down below. The stock to flow model was first used in the commodities markets such as gold or silver. And the idea is that the less new production there is, the more rare something is, and thus the higher the price should go. So it only looks at the supply side of the equation. It doesn't really look at any demand. But when applying this model to Bitcoin, we can see quite a good fit of the modeled price to the actual price. So the modeled price in this chart is here in blue, and you can see that it's rather flat for around 3 years, and then it shoots up by 10x the following year. The reason the price shoots up so much is because the new supply gets cut in half. There's a very interesting article on medium.com that explains this whole concept, that explains the whole calculations, and I will link this as well in the video description down below. But for the sake of this video, we're just interested in the annual growth that this model predicts. So currently the model price is at around 42k. So according to the model, we are slightly overvalued. If we look at the price 4 years from now, we get at a prediction to 625k. So what annual growth rate do we get here? The answer is again around a doubling every year. So here again a summary of the expected returns based on what approach you take. If you just look at the historical returns, you get the highest value. If you look at the regression rainbow chart, you get the lowest. And all of those returns are way above what you would expect in a traditional market. And the returns have to be higher because the risk is way higher. The prices fluctuate more. If there's a crash, prices might drop as much as 85%. In fact, for Bitcoin, that happened several times. But overall, I think it's still a good trade-off. There's no other asset that comes anywhere near this. Maybe property, if you lever this up a lot, if you pay maybe 10% down and you buy it at the right time. But for any unlevered asset, these kind of returns are absolutely impressive. If you like this video, feel free to subscribe. I've also set up a Telegram channel, link in the description below, and feel free to follow me on Twitter as well. See you next time. Bye.